I just realized? I did not bring my tax book with me. I looked at it when I was getting ready this morning and went, it's Tuesday, I don't need it.
Sandra.
The one who actually had it in the first place.
I looked at it
Yeah.
right there in front of me and went, I don't need it.
Well, Jessica passed hers. We'll talk about that in tax class. But cost accounting, a few pages in chapter 2 you should take definitely note of, and that would be page 35. That's direct materials and direct labor. 2, cost parts of product cost. And overhead is the other one, and that's what we want to talk about a while this morning, is overhead. We know it's stuff like fixed depreciation in general. We know it's custodian. We know it's nurses. Now, I worked at Chrysler Corporation one summer. It was a stamping plant, and that little place now, it was a township, now it's a city, Sterling Heights, Michigan, near Detroit. But we made parts that went in to Chrysler cars. And I just worked one summer. It was a great experience. Anyhow, you can see what direct labor was. People working on assembly lines. Direct material was really, we started out with raw steel. And factory overhead though, we had quality control inspectors. If there was 7 machines on a line and your final product ended up in some kind of crate or bin, you got a quality control inspector to come around and look at some of those, and they could be rejected. So, anyhow, it would be a great experience to visit a factory. There used to be a Lear down in Lebanon, Virginia, and I used to take students through that factory. They made truck parts for Chevrolet, GMC, door panels, and so on. Well, I think that company went to Mexico, and they're producing those parts in Mexico, outsourcing. But it was a perfect example of just-in-time inventory, and perfect example of raw materials. They started out with plastics or metal, and it was a perfect example, that company was, of saving or recycling, so on. But Chrysler Corporation was an experience. I had a black gentleman that was a good friend of mine. We talked. During our lunch breaks. He's a preacher. He invited me to his church. And I asked him, did any other white people go to his church? He said, no. I said, well, I better not come. That was way back in the day. But learned a lot in those 3 months. I had a black foreman. He was the one that came around and said, you're a good worker, be a damn hillbilly. A compliment mixed in with not a compliment. That was a hard job to leave, folks, to come back to college. I went to college a year. It was hard to leave to come back to college because I was getting plenty of overtime. They paid good. I'd have soon been union. I would have went up at that company. I would have probably been, if I'd been there, I would have ended up being superintendent of that factory. But we walked different roads in life, and I took a different walk. All right, but now look at page 36. Look down at the bottom of page 36. These are some costs. Quality cost usually refers to either cost of controlling quality or cost of finding or failing to control quality. Cost of controlling quality include preventive and appraisal costs. Preventive costs are incurred to improve quality by precluding product defects and improper, of course, proceedings from occurring. Now, that's why we had a quality control inspector at Chrysler. He inspected a sample of the products we finished. So quality control comes in with this preventive cost. And then you go on down here and there's certain preventive costs. Amounts incurred for monitoring or inspecting are called appraisal costs. That inspector would have been appraisal cost, even though if you have one, that's also preventive. These costs are incurred to find mistakes, not eliminated through preventive others. Now, the inability to control quality results in failure costs, which may be internal, such as scrap and rework. So failure cost is where we get outlets with defects and flaws, refurbished, failure cost. Warranties comes in because of failure cost. Now, accumulating and allocating of overhead. Now, I want you to flip over a page to page 39, then we'll go back to this page. I want you to look at these entries on page 39. Now, I see a couple of you don't have a textbook. Is yours an e-book, William?
No, it should be on the way soon.
On the way. You got your e-book saved?
Mine's on the way as well.
Yeah, I forget that somebody didn't have books yet. So let me do this. I've never had that before. Agreement to pop up. All right, here's the entries I wanted you to see. So I'd like for everybody to see them. Now, here we buy raw materials. Here we put raw materials in the work in process. Debit work in process, credit raw material. Here we put salaries and wages. Now, variable overhead is debited here. And that's for indirect labor. We didn't have any indirect materials. Now here are some fixed overhead. That's supervisor salaries or whatever. And credit salaries and wages payable. Now, here then we have variable overhead and fixed overhead, and we credit utilities. Some of utilities, I thought I was on PowerPoint. I'll have to slide. All right. We debit variable overhead and debit fixed overhead, credit utilities payable. What part of utilities are fixed? Probably telephone bills for business and industry be fixed now, wouldn't it? They probably have some fixed part of their electric bill. It's going to be electricity whether you open the doors or not. And then we go down to more variable overhead. This was your materials there. Your indirect materials, credit supplies. They separate. Some companies don't. They just keep inventory in either direct or indirect. And here is fixed overhead and credit cash to record payment for property taxes. And here is more fixed overhead. And credit accumulated depreciation. with debit fixed overhead, credit prepaid insurance. Now, right here, to record the assignment of what? If we know it, that's good. Now we can go back and add up actual cash. A lot of companies, like a construction company, even a furniture company, they like to give bids. Do you all know what the first 2020 Corvette that came off the assembly line in Detroit sold for? The sticker price is $59,999. 60,000. First Corvette that came off the assembly line a couple of weeks ago. You know what it sold for at auction? $3 million. One of the NASCAR racers and owner, I believe it's Hendricks, he collects cars, and he bid that much on it. But it went to charity. That $3 million went to charity, which was a good thing. But anyhow, AAA is making that Corvette mid-engine. Now, what does it mean, mid-engine? Have any of you ever seen a vehicle with an engine in the rear? What kind of vehicle is this?
I don't know what it is, but, oh, my cousin's Fiero.
A what?
A Fiero.
Okay.
Yeah.
But the old Volkswagens, I owned a couple of back in the day, they had the engines in the rear. How about a Porsche? Does a Porsche have the engine? A little Porsche, I think it's a little small Porsche. But this Corvette's supposed to be mid-engine. I don't know what that means. Most of the engine probably is in the middle of the car, to the front or back. I don't know. But anyway, here you add up your actual inventory. Keep a ledger account. Keep a ledger account. All right, then it goes into finished goods, and then it's sold. These are all the entries necessary for cost or managerial accounting.
But yeah, it's basically behind the passenger seat.
Won't you look it up?
Yeah.
All right. We're talking about manufacturing, and when you can manufacture a car that sells for $3 million, when the sticker price is $60,000. Some people like the first edition that comes off the assembly line. They'll pay that much. Especially if he's a car collector and has that money to do it with, and he did. But now, we're going to flip back a page. We don't always have the luxury we don't always have the luxury of having our actual overhead. We have to wait to the very end of the process to know all of your actual overhead. Now, sometimes we've got to have a predetermined overhead rate. We've got to give bids, and we've got to know what we're going to put in the overhead, and record overhead as we go. We don't record depreciation until the very end of the month, do we? Or the end of the year. So we want a predetermined overhead rate. They're allocated to cost objects to determine the full cost, to motivate the manager in charge of to be efficient, and to compare alternative courses of action. You need a predetermined factory overhead rate. An alternative to the actual cost is a normal cost system, which contains actual materials and costs with overhead that is assigned using a predetermined factory overhead rate. Now, how do we determine a factory overhead rate? And what's it based on? I think some of you that had managerial know this, but this will be a review for some of you. Okay, let's say your predetermined overhead rate, cost, or last year was $250,000. That's your budgeted. It's either budgeted or estimated, or both, and that is your overhead. Going by history, cost, or comparing years in the past, you determine that is your overhead. Well, you determine your direct labor hours last year or in the past was probably 25,000 direct labor hours. So to do a predetermined overhead rate, you take the overhead, estimated overhead, and divide it by some kind of base, and here it's direct labor hours. That'll give you your predetermined overhead rate. All right. Probably better just to call it rate. So what is my overhead amount here? 250,000 divided by 25 is what? How much? $10. All right, per hour. When you divide dollars by hours, you get dollars per hour. Now, once we work this month, and we had 3,000 direct labor hours this month, then what is my overhead for this month? How much? 30,000. Now that's when we debit work in process and credit factory overhead. Now remember, actual overhead is always debited. Predetermined overhead rate is always credited. Okay, so using the direct labor hours is one method. We could have used machine hours. What would be the overhead rate if we based it on machine hours? $50 and the 250,000 would be $5, wouldn't it? All right. Or if we had more, I would say machine hours is more than direct labor hours, or it could be the same. Now, what if we wanted to base it on direct labor cost? Now, these are the three usual methods: hours, labor hours, machine hours, and labor cost. Now, here again, you get $10 per hour or you get $5 per hour. But here I'm going to divide direct labor cost of $500,000 into 250,000. And what will I get? All right. Before I got dollars, hours into dollars, hours into dollars. Now I'm dividing dollars into dollars, and I will get what? Decimal 50, but it's not cents. It is 50%. Dollars into dollars gives you a percent. All right. So if I decide that my direct labor cost this month is $40,000, if my direct labor cost is 40,000, what is my factory overhead? 50% of 40 is 20,000. There are your three usual methods to allocate overhead. All right. Now let's go back to your book here. I don't know why it shows that up and they film like whatever. Predetermined overhead rate. All right. Now, do they show you the methods? This is just showing you the process. And a journal entry for what we were doing is not here because they were using actual, weren't they? Now, one thing in this chapter I want you to know, and we're going to practice one before the period's over. Some of you don't have your book yet, so we'll practice one in class. Now, here's a factory overhead statement. You take beginning inventory plus purchases, gives you materials available, end minus ending gives you materials used. Direct labor is usually a one-liner. Overhead, they've got two categories. Labor, utilities, supplies are variable. Supervisors, utility, tax, depreciation, insurance are fixed. So you've got two categories of overhead. Now when you add the three together, I was just thinking about a couple of my students in here. They go over to Mr. Lilly's business law class. They said he forgets to turn on his Surface Pro. Now, if he's got live streaming students out there, what are they going to do if he forgets to turn it on? And this Surface Pro has so many little things that help. It gives you a notepad for one thing. It gives you this Elmo for two things.
No, he does the selection.
Oh, okay.
Yeah, he does not use anything.
Okay. There's statistics on how much you remember from what you read, how much you remember from what you hear, how much you remember from what you see, and how much you remember from by doing it. Doing it always wins, okay? Okay, so we take materials, labor, and overhead, and we've got total current manufacturing cost. All right, total current manufacturing cost. Now, if you had no beginning or ending inventory, that would be your answer, 934. But you're adding beginning work in process, and you subtracted ending work in process. And this gives you cost of goods manufactured that's transferred over to your income statement instead of purchases. This is what goes on your income statement instead of purchases. Now you can see I've marked part one is what? Your materials. Part two is your labor. Part three is your overhead. And part four is adding and subtracting your beginning work in process inventory. Now here is the schedule of cost of goods sold. We know that's part of an income statement. We know we take cost of goods sold from gross revenue and we get gross profit. Not net profit, but gross profit. We don't get net profit till we take out selling and administrative expenses. Okay, so there's that picture. Excuse me. Now Jessica's looking at it, and Alexander's looking at it. You other two guys will have to remember it or turn around and look at the books behind you, okay? Because we're gonna practice one real quick. Now, if you don't have a book, that's okay. I'm gonna try to put it up here.
Probably on its way right now, and we're in. Eventually.
I don't like the problems they have in here, but there's not one just straightforward. I'm going to try this one. I don't know where this came from. I'm going to try this one. I want to make sure everybody sees it. It's LO7, whatever LO means. Alright. Irresistible art produces collectible piece of art. The company's raw materials inventory account includes the cost of both direct and indirect. Account balance for the company art. You've got beginning, ending inventory for all three. During the month, the company purchased $656 of raw materials. Direct materials used during the period amounted to $504. Well, let's check that out. All right, to check that out, take your 93.2. You don't have to put that on part of the statement. Take your 93.2 plus your 656 and subtract 69.6. See what you come up with. Does it give you 504? Anybody get 504? All right, how do we get materials used? Okay, now, you take 93.2, add to that 656. How much does that give me?
749.2.
Yeah, if you subtract 69.6, that leaves what?
679, 600.
Yeah, 679. But here they say direct materials used during the period of 504. So I'd have to assume the difference between 504 and what you get there,
679, 6.
the difference would be indirect materials, which would be factory overhead, wouldn't it? That's what I've got to assume. All right, we found materials and indirect materials. Factory overhead costs for July were $788, of which 75% was what? What's the other 25? All right, and we've got two overheads so far, materials and what? Labor, right? Now, overhead charges for all these other items was $600. Now, prepare a cost of goods manufactured statement. Take a minute and do that, put it down in proper form. Find your material, find your labor, direct. You got three overhead items. Your materials, labor,
You step a few steps back.
what?
Could you step
Oh, I'll have to, won't I? Can't see that side. Anybody have a final answer yet? Well, I'm gonna need to minimize this for a minute. All right, do you have what I have? Okay, you had raw materials plus purchases, and we did that, 749. And I told you to take away raw materials used. I mean, take away ending, and if you take that away from your total, you've got indirect materials. Here they say plug it in. Direct materials used was given to you, 504. 75% of labor is your labor. Now we calculate these two. They gave you that one. You got this. So your total cost to account for was 2,214,000 minus, well, you had to add beginning inventory minus ending inventory gives you 2,094,000. Did you get that, Jason? 2,094,000. What'd you go wrong?
I only got down to, total raw material use.
Okay. You got down to here.
The 679.6. That's
Down.
where I got down to.
Okay. Well, I didn't give you enough time. Anybody can get all the way. Okay? Didn't give you enough time. Anyway, we must practice manufacturer statements because it will be on the first test. Have to have a manufacturing statement. All right, when you all get your books, that will help. Where I can not have to flip some of these gadgets up here. Okay, now back in your textbook, when it came for direct materials, direct labor, and overhead, and journal entry, and a manufacturer's statement, that was the end of your chapter. So what we're doing today is practicing your chapter. Now we got to practice a couple of overhead rates, and I'll give you more time, I hope. A lot of product cost classification. I don't see any good problems on calculating the factory overhead rate. That's strange. They assume you already know it, I guess. So we're going to move up to this problem then, since I don't see any good problems on overhead rate. We're going to move up to practice some journal entries. All right. I don't believe you'll need a book for these, even though there was a good page in your book that we looked at. Go ahead and take a shot at as many of these as you can get in the next few minutes. I'll give you something like 7 or 8 minutes.
Can you take a few steps to your left, this way?
Yeah, well, let's see. I'm wondering if this is a good one or not. Supplies we know is overhead. I don't like this.
I don't like these,
I don't like it because it's a service business. Right now, I'd like for it to be a factory business. Let's drop that for now. We need to look at it though. Let me find a factory business. That's what we're studying.
number 44.
All right, let me see real quickly. All right, let's do entries. No matter what the product problem says. Crap. I either turned my book wrong or my projector wrong. Let's see. Raw materials was purchased. Direct materials and indirect materials were used. Factory payroll. Office salaries. Utilities. 70% were for factory. Depreciation. 80% was for factory. Rent. The factory occupies 60% of the rent. Now, take it away and do some journal entries for factory.
She hasn't told us what to do yet.